Good morning, good morning, good morning. So everybody is talking about the Amazon stock buyback, and if you're not talking about it, that means that you are not really into the world of finance and wealth. And it's my job, hopefully, to encourage you to get into it, not only for yourself, but for your kids, and not just for uh, the ability to uh, earn money, but for you to be able to live like most people live who are in the stock market. One of my favorite things to do, as you all know, on the podcast, frankly speaking, and now in the magazine, is to talk about investing and how it has helped me out so much. I think you all may have realized or remember last year, I showed you all how I took a trip to Vegas using only my Amazon stock. And I actually showed you all, and I showed you when I got back. I left on a Monday, and I got back on a Friday, and all the money that I took out of that stock to go on that trip actually was back by Friday, because that's how investing works and how it goes. So I'm going to try to talk a little bit, maybe about 10 minutes, about the Amazon stock split, and probably help you all out. But for those of you that don't know, everybody is talking about it. I want to show you some things that I saw yesterday when the announcement was made. I don't own these, so I've kind of altered them a little bit so I can be able to show you all these. But take a look at what people are saying about the Amazon stock split.
Well, never thought we'd see the day. As you can read here, Amazon just announced a 20-for-1 stock split, but what I really want to talk about is the $10 billion it's planning in stock buybacks. If you don't know what buybacks are, they're exactly what they sound like. The company is buying back its stock from investors. Why would a company want to buy back its stock? Well, there's a couple reasons, but one of the primary ones is to simply try to make the stock price go up. Remember, stocks trade based off of supply and demand, and buybacks are a way to try to reduce the supply. If supply goes down and demand stays the same or goes up, the price in theory should go up. Buybacks are perfectly legal, they happen all the time, but companies have to be smart about how they go about them. You guys remember the airlines actually had to get bailed out, and it turned out that they spent a ton of money on buybacks instead of just having a normal cash reserve. Going into 2022, Amazon had almost $100 billion of cash in its balance sheet, so I think it's going to be okay. Share this with a friend and follow for more.
So as you can see, that's some big news. Amazon stock was what, $3,000 or whatever when I first got it, and for it to be only $150 now is pretty impressive. It allows people who could not afford $3,000 to get into it. But I need to start by telling you that you should always do your own research, right? People used to tell me all the time that you shouldn't buy stocks. You should only do index funds or just stick with a 401k or whatever. So I actually did all of that because I wanted to do my research. I wanted to know, So I got the index funds, what I still have today. I got the individual stocks. I've got the 401k, unfortunately, which I hate. Talk about later on. And I was able to figure out for myself that, wow, when I learned how to do it myself, I'm making more than my 401k or than a financial advisor. But of course, they're really in it to make money for themselves. I'm not mad at them for that. But I want to make sure you all know that I'm just sharing with you some beginning steps of how I learned how to do it and what works for me. And just because I want to be open about it, I use several investment platforms and techniques because I'm always teaching people about it. So I need to be able to use what they're using. So my favorite one, obviously, is Robinhood. It is the best to use for somebody that is beginning and looking for some long-term investing. It is not good for those that are looking to gamble or day trade or any of that stuff. Because it has issues every once in a while. When the market gets hot and everybody jumps on the one stock, they have to slow things down because Robinhood upfronts your money, right? So Robinhood is the largest brokerage in the world right now. Everybody uses it, especially millennials. So if they're upfronting money for everybody, and everybody wants one stock, of course they're going to have to halt it, right? But if you're a long-term investor, you're not jumping after get rich quick schemes. I think Robinhood is good for you. I used to have Fidelity, don't like them. Customer service, don't like. The amount of money they charge when you cash out your 401k, don't like. So I have Merrill Lynch now, you see on the screen, and I only have them because I have a 401k match where I do some work at during the week. And if you have a 401k that has a match, that you want to get. That's free money that is investing for you. I'm not a fan of 401ks, but I am a fan of 401ks that have a company match. So I do use Merrill Lynch for some of my things. Also use Webull. Webull is a little bit more advanced for people. PayPal has investing on it now, which I use that a lot for teaching people how to use PayPal to get crypto. Cash App now has an investing platform. A lot of young people have Cash App, so I have some investing in that. And then the last two, Fundrise is where all my real estate. I've got recently Christian and Jordan. We're doing some real estate investing. We use that to Fundrise. We're going to do it in a later episode. Matter of fact, we actually just acquired some new property, as you can see there, I believe, in Florida. That was added to our list of properties. So I'll be discussing Fundrise later on. If you're interested in getting into real estate, you should be diverse, obviously. And then Vive or VV, that's where all of my NFTs and things are. And I'll get into that at some point as well down the line. But today we're talking about the Amazon stock split. Now, a lot of people ask me, based on their age, what stock should they get? And I never answer that question. Although today, I told Christian is everything to me. If you watch Frankly Speaking, Christian Walker, you already know about Christian and that story and where we are, death in the family, what have you. And it's funny because last night, something happened to me in my and I had made a decision that I was going to focus more on Christian. And boom, Amazon did a stock split. So today, this morning, actually, 6 a.m, I'm on the phone with Christian, working out some kind of plan to get him in on this, because who would have thought that Amazon would have done this? And even people of color are getting in on the acts with the Amazon stock split, which I like to see. Young folks getting in on it. Take a look at this.
What's good, trappers? It's your boy, the Wall Street Trapper, man. And Wall Street looks like us now. Amazon just announced a 20-to-1 stock split, same as Google. But most importantly, what they did was they announced a $10 billion share buyback. That's going to make the stock price go crazy. So right now, if you bought Amazon at the 20-to-1 stock split, if there was the split right now, you would get it for about $145 a share, which is amazing because Amazon is one of the greatest businesses of our era. Along with Google, along with Amazon, I believe that you should definitely have these businesses in your portfolio. I mean, you will get 19 shares for every one share that you already have. Check out Amazon, man, with the new CEO, board of directors. This was clutch at a great time. It's your boy, the Wall Street Trapper, man. I tell you, it's the greatest time for us to build wealth, man. Trap with me.
It brings me joy to see the next generation investing. It can solve every problem in the world. But now, my top 3 favorite stocks, if you have been following me long enough in the world, you know these are mine. Everybody should get their own. These are mine. Apple, which is wherever Apple goes, is where the stock market goes. Obviously, if Apple goes down, the whole entire market goes down. Amazon is one of the greatest businesses of our generation. A lot of people only think that they own Amazon, the website, but they actually own Whole Foods. They own electric car companies. They own some gaming. Amazon does way more than you think that they do, which is why their stock price was over $3,000 for one share. And then, of course, Google. Google is changing the world. Don't sleep on Google. Those are my 3 favorite stocks in my portfolio. I make sure that I have them anywhere when I'm doing 401ks or a financial advisor, which I'm not a fan of, but when they're helping me out, I'm always saying I want to see some Amazon, I want to see some Apple. When I'm doing index funds, I want to make sure there's some Apple, there's some Amazon, and there's some Google in there. So this stock split means that for every one share of Amazon you will now have 20. That doesn't change anything or any value for you, but it is always better to be in the market than to time the market, right? Everybody who already had Amazon stock is going to benefit from this because, as you heard, it is going to boost the stock price like crazy. So all of us who had Amazon before, right, we're going to see the fruits of this. Now, everybody else at the last minute is going to jump in on it, and then they're going to get it, and they will have some benefit, but they won't have the same benefit as those who are always in there. And one of the things I always tell people is it is better to be in the market than to time the market because you don't know when I would have never thought that Amazon would do a stock split. They have waited for years to do this, which is why it's always better to be in the market as opposed to timing the market. So for every one share of Amazon stock you actually have 20 shares. Doesn't change anything in your portfolio. But what it does is it's going to raise the stock price because not everybody else is about to jump in on it because they can afford it now, and it's going to make your capital gain. You're going to be just like when I just looked at my account this morning before the market even opened, I grabbed a drink. And again, I called Christian. That's my focus now. And I'm like, you got to get up, you got to do something. Because one, he's in his 20s, right? And my strategy for him is different than it is for me, right? I'm 44. I have a different strategy. So I want to talk really quick about if you're young and you're investing, what should you do? So I have him on a $25 a month investing plan, right? Because over history, research shows us that if you're in your 20s, investing that amount of money per month, by the time you retire, you will be a millionaire. You will have at least if you don't mess it up, you have at least $1 million to stop working at. And that is called dollar cost averaging. No matter what the market does, he's always putting in that amount of money. And I got a video that would explain dollar cost averaging a little bit better.
There was a way to predict the stock market's impending crash in February, sell before, then buy back at the bottom and ride it all the way back up, I would be lying to you. If anyone had that predictive ability, they would be a billionaire. But there is an investing strategy that allows you not to invest all of your money at the top of the market. The investing strategy is known as dollar cost averaging, and you see me use it in my weekly Robinhood videos. At its core, dollar cost averaging is a very simple concept, so let's go over an example. Let's say you're looking to invest in the stock market, so you look at an index fund like SPY to get exposure to the S&P 500, and you decide to invest $5,000 on February 20th. If you invested the $5,000 all at once, you would have a return right now of minus 5.6%. With dollar cost averaging, you split that lump sum over a period of time, and you invest a chunk at a time. With this method, your overall return would be 11.2%. And of course, it could work the other way. This is just one form of market timing, and here's the benefit. Strips out short-term volatility and takes your emotions out of it.
So that is what he is on. He's in his 20s, dollar cost averaging. And he just invests a certain amount of money into the market over time. He's not jumping after anything. He's not chasing anything. He's already in the market when something big happens, like this stock split. He's already in it. So by dollar cost averaging, he doesn't have to do anything. He can add a little bit more if he wants to, but he's going to benefit from every type of big announcement because he's already in it before the announcement is made. I don't ever let him or allow him or want him to invest a huge chunk of money at one time. I need him to dollar cost average it out. Now, on the other side, how do I do it, right? I'm in my 40 or 44 now. I have a lot of people who are in their 70s that email me or message me from church about investing because they understand that they're not investing for themselves, per se. They're investing for their grandkids or their kids. I heard this song on the radio. I forgot who it was. It wasn't about investing, but it just hit me. And the question was, I don't know who's going to I don't know who's going to love you when I'm gone, or I don't know who's going to take care of you when I'm gone. And it just made me think about that. Like, do people actually think about who's going to take care of Johnny or Sally or Mike or Terrence, who's gonna take care of them like when you're gone, right? Because right now when you're alive, you're able to provide for them, and you see how the world is. Why wouldn't you want to put $10 aside to take care of them when you're gone? So that's how I invest now. I think I'm good when it comes to retirement for myself. I don't even work as much now. But now my focus is on really, especially Christian. My focus is on Christian and being able to give him an inheritance. This is what you're going to inherit from me. So that's my investing style now, which is different than his. So right, he is doing some dollar cost averaging. I'm doing a lot of dividend reinvesting. And that is when I get dividends in, using those dividends to buy more stock. So that is snowballs and snowballs. Compound interest is an amazing thing. It's an amazing thing. So I'm using that right now. I am sort of keeping an eye on the 401k. When the market goes down, 401k, by the way, is the slowest way to build wealth, by the way, to let you know. That is the slowest way. Look it up, Google it. So if you're into building wealth slowly, then the 401k is definitely for you. But I have diversified my portfolio because of my age, and that's why there's some real estate there, and which I want to discuss in a later video. There are some NFTs, there's some crypto there, which I'm going to discuss in a later video. But what I do now at this age is I make a list of where all my money is going, and then I invest and own those companies. I love me some Mariano's, and they are owned by Kroger. You better believe I invest in Kroger. I have Hulu. I have Disney Plus. You better believe I invest in Disney. My insurance is through Allstate. You better believe I invest in Allstate. So when I get those dividends from Allstate, I can have them pay my premium, not really me. But that is my strategy at this age in my life, as well as my favorite stocks, which are growth stocks, the Apples, the Amazons, the Googles, the Facebook. So that's my strategy at my age as a person who is now investing for another generation, right? I have a cousin, Centrell, 16 years old. I have some stocks that I got in his name as well. Actually, a lot of my cousins, that's not just him, but a lot of my younger cousins, I have their parents get some stocks in their name. Those are all growth stocks, right? I believe that, you don't do baby shower gifts anymore. I believe you do stocks. So when that baby is ready to go to college, as I'm learning, as a person that's paying tuition for somebody right now, it's a blessing. I'm only able to pay this tuition, by the way, because of that. So that's a blessing. I want to encourage you also to take advantage of the free stocks that are available now. Back in the day, you had to have like $1,000 or $5,000 to even start investing. And that took out a lot of people, especially young folks, people of color. But all these certified and they're regulated brokerages, right? You can't just get into the market and think, do you really think that a company can get into selling pieces of other companies without being regulated? This whole idea that these are scams, lets me know that some people don't get what's going on, right? It's impossible for me to buy a piece of Apple to send me a dividend in my account every week through a scam. So take advantage of the free stock. Learn how the stock market works through getting free stock. That's free money. You can even sell it and cash it out, right? So I'll have a link down in the description there to get some free stock from Robinhood, which is free. Now you can choose to use a brokerage and they're going to take out their percentages or cuts or whatever. But if you learn how to do almost anything in life, if you learn how to do it yourself, it is so simple. If you learn how to do it yourself, and I'm going to walk you through it, you will keep a lot of your own money in your pocket. Please email me, mistakenidentitymedia@gmail.com, or leave some comments down below and I will respond to them. There are no stupid questions. The question that you may have, somebody else may have. So leave it in the comments. But if you don't feel comfortable doing that, then obviously you can email me and I will help you out. So that's the exciting news about Amazon. I You heard about the stock buyback. Not only are they splitting their stock, but they're buying the stock back, and that gives more money to people who are already in the market and we're investing. Let's get on it. Let's invest. Let's do it together. And hopefully I can come back and talk some more about some things next week on investing for beginners.